Welcome back. I'm Pratap here. Today is the 25th March 2024. In this video, let us generate reports for weekly income trade, for bullish trade setup and bearish trade setup reports. And we'll also randomly pick up one stock and let us analyze in detail. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. I kept in a playlist supply demand zone price action course, and even I have provided the link to this playlist in this YouTube video description. You click the link, you will get into this page. And after that, scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action course. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the report generation. So first let us generate a bullish trade setup for weekly income trade. For weekly income trade, HDF time frame is weekly, ITF time frame is daily, and LTF time frame, that is our entry time frame, should be 75 minutes. So that is the reason why entry time frame I am selecting 75 minutes. Because it is bullish trade setup, entry zone should be demand zone. And in the bullish or bearish trade setup parameter, in this parameter at 75 minutes time frame, you need to select bullish. We will also add a few filters so that we can minimize the stocks. The first filter is we don't want pierced zones. Let us eliminate the pierced zones. We don't trade on them. So here look into the last parameter in this page, pierced count. So at 75 minutes time frame, I am going to set minimum value 0, maximum value 0, indicates the zone is not pierced. Pierced count is 0. And in the zone achievement parameter, in this parameter, let us select the value as VOZ, violated opposing zone. And minimum odd enhancer score for bullish trade setup or bearish should be 12. Now let us filter the stocks. So 12 stocks are filtered which are supporting bullish trade setup and satisfying the conditions we have given. Now let us pick up one of the stocks from this list. HDFCAMC, let us pick this stock. The reason is why I am selecting, this is the stock gave very good profits for our daily high liquidity zones earlier. Probably, if I am not wrong, in November or December months. Continuously, some around 9 days or 10 trading days, it continuously every day it gave profits. ROI something around 6%, 7%, that way continuously 9 days or 10 days it gave. So let us see the current status about this HDFCAMC. It is moreover that weekly trend is uptrend, ITF is daily is uptrend, and LTF is also uptrend. Excellent. And price directions are in our favor. So let us draw. Let us open this chart. HDFC Asset Management, and we will change our time frame to 75 minutes, and whatever the zones software has suggested, let us draw those zones. HDFCAMC, the zone 21/3/2024 9:15, and after that 3 base candles. 21st March 9:15, 3 base candles. This is 20th March. This one is 21st March. So this is the candle. So we have a, this is not a base candle, this is a rally candle. See at the hidden body from the previous candle, if you add, it is a rally candle. After that, 3 base candles and a rally candle. So let's draw the zone here. So this is a 75 minutes demand zone. This is our entry demand zone. Let me mark the label. Okay, then what about our supply zone? This is on 15th March 2024 at 1 o'clock. After that, 1 base candle. 15th March, 1 p.m., 13 hours. Rally base drop. This is the one. Now already prices entered and coming down from this zone. In case prices reach the demand zone, we will get an entry. And this is a daily supply zone. I mean 125 minutes up, 75 minutes supply zone. Okay. So this is our entry zone, and this should be the target zone. So this is currently supporting bullish trade setup. Okay, even while coming down also, there are no 75 minutes supply zones in between. Definitely 75 minutes trend won't be changed. It's still uptrend only. Even entry zone also. Generally we look into the trades on ITF time frame. Daily trend we look. Even 75 is also bullish. So that is the point we should observe. See, if we don't know prices will be coming or this supply zone will be violated and further it will go up. We never know anything. In case if prices comes, we get a trading opportunity. How good the opportunity, that we need to analyze. Okay, for that, what we do first, let me go to the HDF. Let me draw the HDF zones. What is HDF time frame? Weekly. So I am changing the time frame to weekly. Are there any weekly zones here? Yes. Here we have a rally base rally. This is weekly. So weekly zone is looking very strong. And our 75 minute zone is inside the weekly. If it is even inside the daily, excellent, extraordinary. That means 75 is inside daily, daily is inside weekly. That is a very good combination. But we need to check. First, let me draw weekly demand zone. Changing the color, okay. And it is not having any supply zone because it is an all-time high zone, weekly zone. All-time high weekly demand zone. Okay, fine. Because it is all-time high, from all-time high to the distal line of the weekly, you need to divide into 2 parts. If you divide, definitely it is low on the curve. Let us check in the software. Curve, the column curve. Where is the demand zone for us? This is the demand zone. See HDFC. This is the demand zone. Low on the curve. It is low on the curve, the demand zone. So good. Supply zone is equilibrium, 75 minute supply zone. Okay, fine. Because here our interest is on the long trade. This is a bullish trade setup. Okay, fine. Now weekly is finished. We don't have a supply zone. And now let us move on to the daily time frame. That is intermediate time frame. And moreover, one more point, now prices will be traveling from this zone to all-time high by the time prices enter into this zone. And in daily zone, we have drop, 2 base candles and again a rally candle. Let us draw the daily zone. This is a daily demand zone. And this one is weekly demand zone. We didn't label. See here, inside the weekly we have a daily zone. Inside the daily we have a 75-minute zone. So this is a very good combination. If inside 75 if you have a 15-minute zone, inside 15 if you have a 5-minute zone, then definitely that is having, the zone might be having a very good strong order flow. That we will check at the end of our analysis. Fine tuning the zone is the final step you have to do before you take any trade. Up to 5 minutes you have to fine tune to check the quality of the zone, not for taking trade at 5 minutes. You may take a trade at your 75 minutes entry level. You need not go deep inside. If your risk is within your limit, you can take. If it is not within your limit, you will position size and you will plan your trades. Even then, if you are not comfortable, you go inside at 5 minutes, you fine tune, reduce the risk. That way you can plan the trade. You have different techniques are available, risk management techniques. Everything you learn in your course. I have explained all the techniques. If you go through from lesson 1 to lesson 19, the recently we completed lesson, I have explained all the risk management concepts at different stages. So this is excellent. So price direction is in our favor in both, even by the time prices are coming back and reaching, again the price direction will be changed towards the up in our favor. You should also look for anticipatory price direction. See, while coming back, price directions will change. The moment they enter here, again the change towards the up. The zone confluence, that is the advantage we have. Automatically all price directions will change the moment they enter inside the zone. So now let's go to the 75 minutes time frame. What is the RR you are going to get? But here you observe inside this 75 minutes from here to here, how much RR is there? That is also you need to check. Let me look into the long position. Okay, how much RR we have? We have 1:2.45. Do you accept this trade? Definitely you don't. But what we do, we don't take type 1 proximal entry. We look for type 2 proximal entry. Now you reduce the risk. Now what is the RR you got? Now let me reduce the. Now you got 1:4. See, the moment we changed from type 1 proximal to type 2 proximal, we got sufficient RR. Now only thing you need to calculate, the risk, is it within your limit? If it is not within your limit, recently in lesson 19 you learned position size. Apply the position size and reduce the risk and take a trade. That way you can plan. If you are not aware of position size, please listen lesson 19. In lesson 19 position size I explained very clearly. But you have a very good, excellent RR. 1:4 RR is there. But see here, all the prices are holded here. It is somebody is holding. Who is that? We have a rally. The 75. Look into this 75-minute zone. There is one more zone here inside. This is another 75-minute zone. See, every time it is picking the orders from this zone and again moving up. See the move? Again picked up the orders from this zone. Again there is a move. Again they picked up the orders from here recently, the zone that is created. The daily zone is created from this zone. This 75-minute zone. Probably this could be a high liquidity zone. Probably. We need to check with the help of our software. Let us verify. Why should we compromise? In case if prices enters into this high liquidity area, we should not miss our trade. Moreover, the recently created daily demand zone is created with the reference from this 75-minute zone. More likely it could be a high liquidity zone. Because multiple testing is taking place here. High liquidity zones only might be having the capability. When is this zone leg in? This is on 14, February 5th, 14-15 candle. HDFCAMC 75 minutes time frame. Let me generate the supply demand zone chain for this 75 minutes. And meanwhile, what is the leg-in? I forgot this date is on 5th February, 14-15. 5th February, check. 5th February. Yeah, 5th February, 14-15. 4 base candles. Yeah, 1, 2, 3, 4 base candles. We have a leg out. And this is a high liquidity zone. And moreover, it is S_DZ, our support demand zone, already tested 5 times and gave 9 rejections from this zone. A very strong order flow is there in this zone. So let us mark. We should not compromise on this. Next time when prices enters, in case next time if prices comes, in case if the earlier zone is failed and prices came here, you should not leave the stock. Again you need to pick up once again from here. And moreover, this high liquidity zone is the reason behind creating this daily zone. This entire daily zone is created by picking up the orders from this high liquidity. So next time institutions, maybe they don't want to let the prices enter into this high liquidity area. From before itself they want to push the prices. That could be the reason. So first of all, we have to plan our trade as per this. The reason is a trend is in our favor. If prices are entering, we should not miss. If suppose the supply is violated, prices are moving up, okay, we miss this trade. But we are preparing our plan. So excellent. And not only that, here, whether I don't know whether you observed or not, here we have one more 75-minute zone. We have a drop, 4 base candles and a rally. When is it? 20 March, 9:15. Yeah, here see, this is a normal demand zone only. 20 March 9:15, 4 base candles. So here we have one more normal demand zone inside this. That means the daily demand zone is having multiple order flows. Moreover, they are LOTL zones. These 2 zones are LOTL zones. Let us reduce the risk. Risk means type 2 proximal. In case if this zone is failed, the next zone is active. Even if this is failed, below high liquidity zone is there. This is how institutions created the order flows. But how good the order flows? Let us check. But our trade plan is on this fine-tuned this zone, the 75-minute zone, for the first one. Because this is the one immediately available, and we plan in this zone if order flow is good. Otherwise, we will plan below this. And moreover, both are HLQ. Both are LOTL zones. Even if the first one is failed, your trend won't be changed. When trend will be changed in LOTL scenarios, both the zones should be violated, then only trend will be changed. Even then trend won't be changed. The reason is below high liquidity 75 minutes, that is also a LOTL zone. But only point you need to understand, such a big order flow they created inside this area. See the order flow. Here we have order flow, here we have order flow, here we have order flow. Such a big order flow. But where you identify the order flow, if you fine tune to the lower time frames, you will be able to find. So let's go to the next time frame, 15 minutes, to check the order flow is there or not. So here we have a leg candle, 1, 2, 3, 4 base candles and a rally candle. This is a 15-minute zone. This is 15 minutes demand zone. Fine. What about this? Is it having any order flow here? Yes, here also we have. Another 15 minutes demand zone. See the strength of this. This candle came here and then stopped here. So prices didn't allow further go down. And after that, with the gap, prices went up, then probably the next day. So the strong order flow pushed the prices. So definitely, probably, my bet is in this area, there is a strong order flow in this zone. Because of the rejections with a gap in the next candle itself. But anyway, let us mark this another 15 minutes demand zone. Is it enough to fine tune up to this 15 minutes? No, not enough. 5 minutes is the least, at least you need to keep. Up to 5 minutes. So now I am changing the time frame to 5 minutes. Here, do we have any order flow? Yes. We have a rally candle. We have 1, 2, 3, 4 base candles and a rally candle. So this is the 5 minutes demand zone. Let me add the text. So very good. We identified. So that means the quality of this zone is good. No issues with this. What about the below? So here also, if you are not convinced with this candle as a leg candle, if you are convinced, we have a drop 1, 2, 3 base candles. If you are not convinced, 1, 2, 3, 4, 5 base candles. Definitely this is a leg candle. 6 base candles. So either way you can draw the zone. But whatever the way you draw, still this is only the zone. The reason is, even if you consider 6 candles, or if you consider this as a drop candle and 3 base candles, the depth of the zone is like this only. Because in drop base rally, you have to use the low of the leg-in candle. Or if this is a rally base rally, the low of these base candles. You won't consider rally candle. So this is a 5 minutes demand zone. Is any orders picked up from this zone earlier? Let us check. No. Just before the zone they came and prices moved up. That means there is a strong order flow in this 5 minutes area, definitely. And this is another 5 minute zone. Rally, 4 base candles and a rally. Inside this 15 minute zone. Okay, where you are planning your trade, in the 15 minutes time frame or 75 minutes time frame, it is up to you, depending on your risk management. But remember, this is a WIT trade, weekly income trade. So weekly income trade, 75 minutes is your entry time frame. You want to take at the proximal or you want to take at the deep inside, that is all depending on your risk management. Because there is order flow here, definitely you have to take at this proximal of 75. Now the question is, you need to keep your risk at the distal line of this 75 minutes time frame. So that means you can take a trade in this area, or you can further let the prices get into this area and you can take the trade. That you have to plan. Because sometimes what happens, prices may not come up to this 5 minutes area. Let me go to 75 minutes, I will explain, you will get clarity. Here my question is, do you want to take a trade in this proximal line of, this is the type 2 proximal of 75 minutes, or do you want to wait until prices come into this fine-tuned area? That decision you have to take. Because it is a bullish trade setup for weekly income trade. Sometimes prices may not come up to this 5 minutes fine-tuned area. They just touch this line, they go up. Or they may go a little deep without coming to 5 minutes, again they go up. That possibility is also there. Sometimes prices will come up to this fine-tuned area. That is also possible. But it is all depending on the risk you want to handle. If you are in a position to handle this entire risk, you will take at this proximal. If you feel I can't handle this risk, then let the prices go inside up to your risk handling level. There you take the trade. In case if prices turn a little earlier, go up, you miss the trade. You have to accept, because the risk is beyond your acceptance level. You cannot compromise the risk, please remember. Even if you miss the trade, not a problem, but you can't compromise at your trade. Compromise at your risk management. So this is about our HDFC WIT trade, bullish trade analysis. Hope this analysis will be helpful to you. See here, we didn't limit ourselves to fine tuning to 75 minutes time frame. We went up to 5 minutes and checked whether the quality is good or not. That we have to do, because we know when a zone will be violated. We already identified the rules when a zone will be violated. If the zone is about to violate as per our rules, do you want to take a trade? No, right? So that's why we will always fine tune up to 5 minutes. The reason why we fine tune, not for taking the entry, but for checking the quality of the zone. To check there is order flow is there or not. Institutional order flows. We are confirming at 5 minutes level. Because one of our members recently, previous video, he asked a question. Can we fine tune up to 1 minute level? It's not required. If you are fine tuning up to 1 minute level, mostly none of the trades probably you will be in a position to accept. When you have to go to 1 minute level, if you have some doubt on the fine tuned 5 minutes area, you are not able to convince to accept that. At the time, go to 1 minute and confirm. Just for confirmation only, you have to go to 1 minute level. But otherwise, limit your analysis up to 5 minutes if you are really convinced with. Say for example, see here, this 5 minutes is having 6 candles. You may get it out because many candles are there. Can I take or not? Such kind of doubt you may get in mind. At the time, go to 1 minute and check whether any good order flow is there. If there is any strong order flow is there, then you can confirm the trade. If that order flow of 1 minute level is also some disturbed way it is there, then better avoid. Even if you miss the trade, not a problem. So this is about HDFC bank analysis. Now let us generate a bearish trade setup for weekly income trade. So this is bullish trade setup, all the stocks. Please analyze the remaining stocks and plan your trades accordingly. Why I am showing all these examples is because you people should properly make use of these reports. Because software did a lot of analysis and gave you these reports. They are not giving you just like that. A lot of complicated process is there in the background. You are not aware of all those rules. Okay, now I am going back. For 75 minutes time frame, generating bearish trade setup. I mean 75 minutes entry time frame. Now bearish trade setup entry zone should be supply zone. In bullish or bearish trade setup at 75 minutes time frame, now we need to select bearish. Remaining parameters same. PS count we already set, zone achievement we already set, and min odd enhancer score we already set. So now let's filter the stocks. Only these two stocks are filtered now, which are supporting bearish trade setup. Let us check everything is given properly or not in this search. Entry time frame is 75 minutes. Entry zone is supply zone. And your zone achievement is a violated opposing zone. Your odd enhancer score 12. Your bullish or bearish trade setup at 75 minutes time frame, we selected bearish. And zone PS for 75 minutes time frame, we set zeros for minimum and maximum. That means all these supply zones are not pierced. Look into the column PIE, pierced. PIE indicates pierced. CIZ means close inside the zone. How many times prices are closed inside that zone? How many candles? And rejections you know. And the test count also you know. Okay, this is about bearish trade setup. Now before closing, I will generate the stop buffers for your reference purpose. Based on the ATR, we are calculating the stop buffers. For WIT trades, you have to use 10% of the ATR. And I will keep on scrolling this list down. I will be giving you only few seconds time. In case if any of these values you want to read or you want to note down, just pause the video. After that, you can proceed further. So this is the complete list of stop buffers. Hope this information will be useful to you for your further study and analysis. And also please remember, whatever the explanation I have given for the stock HDFC AMC, it is only for educational purpose. I am not recommending any trades, please remember. And in this YouTube video description, I have mentioned the disclaimer. I request everybody read the disclaimer. Whatever the analysis I am doing in our channel, that is only for educational purpose. I never suggest you any recommendations. This is the declaration I am making. And please also read the disclaimer. Hope this information is useful to you. Let us all meet again in our next video. Thank you.